Imagine a world without the IRS. No more annual tax returns, no more audits, no more fear of the taxman. This is the seductive promise of the Fair Tax Act, a radical proposal that aims to replace our entire federal tax system with a single 30% national sales tax. Proponents argue that this system is simpler, fairer, and more transparent. They claim it will unleash economic growth, boost consumer spending, and finally liberate Americans from the clutches of a bloated and intrusive tax bureaucracy. However, critics warn that the Fair Tax Act is a wolf in sheep's clothing. They argue that it will disproportionately burden low- and middle-income families while providing a windfall for the wealthy and corporations. The appeal of the Fair Tax Act lies in its simplicity. Instead of navigating a complex web of deductions, exemptions, and credits, Americans would simply pay a flat tax on everything they buy. This straightforward approach, proponents argue, would eliminate the need for expensive tax preparation software, reduce the burden on small businesses, and free up countless hours currently spent on tax compliance. But is simplicity enough? Can a single consumption tax truly replace the progressive income tax system that has underpinned American society for over a century? The Fair Tax Act doesn't merely tinker around the edges of the existing tax system, it takes a sledgehammer to its foundation. The goal is to wipe the slate clean and start fresh with a single, all-encompassing consumption tax. This means bidding farewell to a whole host of familiar federal taxes. First on the chopping block is the federal personal income tax, the cornerstone of the current system. Say goodbye to filing those W-2 forms and agonizing over deductions. Corporate income tax, the bane of businesses large and small, also gets the axe. No more navigating the complexities of depreciation schedules and investment credits. The Fair Tax Act aims for a clean break from the current system, leaving no stone unturned. In place of the intricate web of taxes it abolishes, the Fair Tax Act proposes a seemingly simple alternative, a 30% federal sales tax on all new goods and services. This means every time you make a purchase, from a gallon of milk to a new car, 30% of the price tag goes straight to the government. Proponents argue that this consumption-based system is fairer because everyone pays taxes on what they consume regardless of their income. They claim it encourages saving and investment, as money earned but not spent is not taxed. However, critics counter that this simplicity comes at a steep price, particularly for low- and middle-income families. They point out that a 30% sales tax is highly regressive, as it takes a larger percentage of income from those who earn less and spend a higher proportion of their income on necessities. The Fair Tax Act hinges on a fundamental shift in how we think about taxation. Instead of taxing income, what you earn, it targets consumption, what you spend. This means that instead of the government taking a cut of your paycheck, it takes a cut of every purchase you make. Imagine walking into a store and seeing a price tag that's 30% higher than you're used to. Proponents argue that this system is fairer because it taxes people based on their spending habits, not their earning potential. This, they argue, encourages saving and investment, as money not spent is money not taxed. One of the more controversial aspects of the Fair Tax Act is its use of tax-inclusive pricing. This means that the 30% sales tax is already baked into the advertised price of goods and services. At first glance, this might seem like a minor detail. However, proponents argue that inclusive pricing makes the system more transparent. Instead of being surprised by the tax at checkout, consumers see the full cost up front. Critics, however, argue that this is deceptive, masking the true impact of the tax, making it seem less burdensome than it actually is. The architects of the Fair Tax Act understood that slapping a 30% tax on everything from groceries to gasoline could be a tough sell, especially for those struggling to make ends meet. Their solution? The prebate a monthly check sent to every American household intended to offset the sales tax burden on essential goods and services. The idea is to ensure that families aren't taxed on spending up to the poverty line. Each month, based on household size, the government would send a pre-bate payment, essentially acting as a preemptive refund on essential spending. On paper, it sounds like a safety net, a way to protect the most vulnerable from the full brunt of the consumption tax. But is this pre-bate system truly the safeguard it's touted to be? One glaring issue is the inherent bureaucracy of the pre-bate system. While the Fair Tax Act promises to abolish the dreaded IRS, someone still needs to manage and distribute these monthly payments. This means a new bureaucracy would likely emerge to handle the registration, verification and disbursement of pre-bate funds, hardly the clean break from government oversight that the Act promotes. Furthermore, the pre-bate system fails to account for the vast regional cost of living differences across the United States. What constitutes essential spending for a family in rural Mississippi differs drastically from the needs of a family living in Manhattan. A one-size-fits-all pre-bate amount simply cannot reflect these disparities, potentially leaving some families in high-cost areas undercompensated. Perhaps the most significant flaw lies in the pre-bate's vulnerability to inflation. When prices rise but the pre-bate amount remains stagnant, the purchasing power of that pre-bate diminishes, leaving families to shoulder a larger portion of the tax burden. Imagine this. You walk into the grocery store, pushing your cart down aisles stocked with familiar necessities. You pick up milk, bread, eggs, the staples of a family's diet. But as you glance at the price tags, a wave of sticker shock washes over you. That gallon of milk that used to cost $4, now it's $5.20. The loaf of bread, once $2.50, is now $3.25. The Fair Tax Act's 30% sales tax has infiltrated every corner of your grocery list, turning a routine shopping trip into a financial tightrope walk. Proponents argue that the pre-bate will offset these costs, but for families living paycheck to paycheck, that monthly check might already be earmarked for rent, utilities, or childcare. For many Americans, owning a car isn't a luxury, it's a necessity. Getting to work, taking the kids to school, attending doctor's appointments, these essential trips rely on the ability to fill up the gas tank. But under the Fair Tax Act, the price at the pump becomes another pain point for families struggling to make ends meet. Imagine pulling up to the gas station, already wincing at the steadily climbing prices. Now add another 30% on top of that. A fill-up that used to cost $50 could easily jump to $65. Healthcare costs are a major concern for families across the income spectrum, but under the Fair Tax Act, affording quality medical care could become an even greater challenge. Doctors' visits, hospital stays, prescription drugs, all would be subject to the 30% sales tax. Imagine receiving a medical bill that's already daunting, only to see it inflated further by the added tax. A routine checkup could become a significant financial burden, potentially discouraging people from seeking preventative care. For those managing chronic illnesses, the cost of essential medications could become prohibitive, forcing them to make difficult choices between their health and their financial well-being. While the Fair Tax Act paints a picture of universal simplicity and fairness, a closer look reveals a different story, one where certain segments of society stand to benefit disproportionately while others bear a heavier burden. Among the potential winners are those with significant wealth and assets. Imagine a multimillionaire with a lavish lifestyle, indulging in high-end purchases and luxury vacations. Under the current system, a significant portion of their income would be subject to federal income tax, but with the Fair Tax Act, only their spending is taxed. If they choose to live frugally, investing their wealth and accumulating assets, they could potentially shield a large portion of their income from taxation. While the wealthy and corporations might find reasons to celebrate the Fair Tax Act, for working families the picture is less rosy. Consider a middle-class family with two working parents, striving to provide for their children and save for the future. Their income, while comfortable, is largely consumed by mortgage payments, groceries, healthcare costs, and education expenses. Under the Fair Tax Act, every dollar they spend on these necessities would be subject to the 30% sales tax. While the prebate might offset some of this burden, it's unlikely to cover the full cost, especially in areas with a high cost of living. This means that a significant portion of their hard-earned income, previously untouched by federal income tax after deductions, would now be funneled into the government coffers through the sales tax. The Fair Tax Act, in its stark simplicity, risks creating a tale of two Americas, one where the wealthy and corporations thrive under a system that minimizes their tax burden, and another where working families struggle to make ends meet as the cost of living skyrockets. Imagine a single mother working 2 jobs to keep a roof over her children's heads and food on the table. Her income, already stretched thin, would be further strained by the 30% sales tax on every purchase. The prebate, while intended to help, might not be enough to compensate for the increased cost of basic necessities, leaving her with impossible choices and a deepening sense of financial insecurity. This potential for increased inequality is perhaps the most concerning aspect of the Fair Tax Act. While proponents tout its simplicity and potential for economic growth, critics argue that it would exacerbate the gap between the rich and the poor, creating a society where economic mobility is further out of reach for those already struggling to climb the ladder. The Fair Tax Act, for all its bold claims and sweeping changes, faces a steep uphill battle in the arena of American politics. Its path to becoming law is fraught with obstacles requiring a level of political capital and bipartisan support that seems highly improbable in today's deeply divided climate. On the surface, the Act's message of simplicity and tax relief might resonate with voters weary of the complexities and perceived unfairness of the current system. However, this initial appeal quickly fades when confronted with the realities of a 30% sales tax on virtually everything. Even among Republicans, traditionally seen as proponents of tax cuts and smaller government, the Fair Tax Act has sparked hesitation and division. The potential for backlash from voters, particularly those in lower income brackets who stand to be most affected by the regressive nature of a national sales tax, is a significant deterrent for many GOP lawmakers seeking re-election. While the Fair Tax Act in its current form faces significant headwinds, its emergence and the persistent debates surrounding it point to a deeper discontent simmering within the American electorate. There's a palpable frustration with the perceived bloat and intrusiveness of the IRS, a sense that the current tax code is rigged in favor of special interests and those with the resources to navigate its complexities. This underlying dissatisfaction fuels the desire for simpler, more transparent forms of taxation, even if those alternatives come with their own set of trade-offs and potential consequences. The Fair Tax Act, while unlikely to become law in its entirety, serves as a lightning rod for these frustrations, a symbol of the yearning for a system perceived as fairer and less burdensome. The political viability of the Fair Tax Act might be slim, but the issues it raises — tax burden, economic inequality, the role of government in regulating wealth and income — are far from settled. These are issues that will continue to shape the political landscape for years to come as Americans grapple with how to create a tax system that is both fair and sustainable in the 21st century. The Fair Tax Act, in its ambition and scope, stands as a stark departure from the tax system that has shaped American society for generations. It dangles the allure of simplicity, the promise of a smaller government, the dream of a tax code free from loopholes and exemptions. But these enticements, upon closer examination, reveal a path fraught with potential pitfalls and unintended consequences. The Act's reliance on a single, all-encompassing consumption tax, while appealing in its straightforwardness, raises serious concerns about fairness and equity. The regressive nature of a national sales tax, even with the inclusion of a prebate system, threatens to disproportionately burden those least able to bear it, low and middle-income families already struggling with the rising costs of essential goods and services. The potential economic benefits touted by proponents — increased savings, investment and economic growth — remain largely theoretical, while the potential harm to vulnerable populations is more immediate and tangible. The elimination of the IRS, while a rallying cry for many, fails to address the underlying complexities of tax policy and the need for effective revenue collection to fund essential government programs. The Fair Tax Act, while unlikely to become law in its current form, serves as a potent reminder of the ongoing debate surrounding taxation in America. It highlights the deep-seated desire for a simpler, fairer system, one that is perceived as both efficient and equitable. The challenge lies in finding a balance, a tax system that adequately funds the government's responsibilities while promoting economic growth and opportunity for all citizens, regardless of their income level. This requires a nuanced approach, one that recognizes the complexities of the modern economy and the interconnectedness of various tax policies. The quest for a more perfect tax system is an ongoing process, one that demands careful consideration, open dialogue, and a willingness to compromise. The Fair Tax Act, while flawed in its execution, has reignited this crucial conversation, forcing us to confront fundamental questions about the role of government, the distribution of wealth, and the values that underpin our society. The search for solutions will continue, driven by the fundamental belief that a fair and just society requires a tax system that works for everyone.